Day, all 13 of you, 12 of you, somebody just jumped ship. I miss you already, Jen. Be safe. See you in an hour. Guys, we're going to take the next hour to talk about Jen. So we'll get back to trading in about 60 minutes. Good morning, Luciano. Nice to see you. Guys, it's Friday. Nope, I'm going to kick you out of the room right now, Jen. See you in an hour. We made it to this 11th day of October. Time flies, doesn't it? Guys, check in news each and every morning to see what's going on. 8:30 a.m. we had the core PPI. And if you were watching the market, Ron called it a dud on the markets he was watching. If you were watching the NASDAQ, there was a super fast spike and then drop before returning to the anticipated area. So it may or may not create this big untradeable, too fast to get in and out move every time there's high impact, every time there's medium impact. So I come to forexfactory.com/calendar each and every day, and I just go, hey, what's going on in the wonderful world of news? I don't want to get caught up in some emotional freight train of emotion thing going on. That made absolutely no sense. And then medium impact, 10 a.m. guys. So this is where I would put a reminder on my phone. This is where I would put a big sticky note on my monitor that says, hey, all right, at 10 o'clock, there's medium impact. It's the consumer sentiment, inflation expectations. These are news releases that somebody may react to. And if they react to it, the market may change direction. The market may spike. It may bounce. And this is really kind of the first advantage that I give myself each and every day before trading is just knowing when that reaction may happen. All the stuff, all the good stuff comes from the Nexgen page, guys, specifically the trading page. All of the answers that you're looking for come from there. And then my job each and every morning is to give you everything that you need to be successful with the software. And we're going to do that with a high probability trend trade, guys. And this trade is designed to create a little bit of confidence. This is a trade that is your first trade. It's your foundation trade. These are the rules for it. There's only 3. This is a trade that when you follow the rules, it typically wins 70 to 80% of the time. This is the trade that when you begin to recognize advantages, you find more opportunities. And then this is the trade really more than anything, and most importantly, it teaches you to read your indicators. It teaches you to read your charts to make sure that you're taking the information that's given so that you can understand whether or not you have the advantages that you need to enter the trade. And chart reading, and I know it sounds weird, but chart reading is the goal for the brand new users. I don't think successful day traders have ever been made in a 5-day demo. I don't think successful day traders ever have been created because of the purchase of software. But what happens is when you go through this classroom, when you learn this high probability trend trade, this trade where each indicator on every chart agrees for the trade, what it does is it teaches you to read your indicators, guys. And that's about 90% of your day each and every day, is being able to look at the chart and just you're waiting for these things to come together. 10% of your day is going to be spent taking trades. It's going to be spent entering the market, exiting the market, managing trades. Good morning, Miss Adriana. And once you are good at reading indicators, once you take these very basic lessons, you will understand where the market is likely to continue, where it's likely to go, and where it's likely to stop. These continuation points will ultimately be the entry for the highest probability trend trade. The likely to go areas are where we're going to see you guys taking intelligent profits at these key areas. And then likely to stop. This is the biggest, brightest red flag ever, waving in your face saying, don't take that next trade. There's too much stuff in your way, guys. And we're going to talk about each and every one of these. And we're going to keep it simple. I'm going to keep it simple. You might make it difficult, but I refuse to. Guys, there's only 3 rules to this trade. Every time a rule is met, it creates an advantage. So the recipe for a trade isn't, I hope it goes up. The recipe for a trade has nothing to do with, I've got to pay my bills. But rather, it's the combination of momentum through rule number 1, a clear path through rule number 2, and then ultimately an entry area for the high probability trend trade via rule number 3. These 3 rules are going to come to be on only 2 charts, guys, and even more specifically, the first bar on the large chart, the most current bar, the one with the active price. This is going to be the one that defines the direction, the momentum, and the areas of the market. This is going to lead the way. This is going to be the chart that you start on, and this is where the first 2 rules are met. So actually 66% of your advantages are going to come from the large chart. Your small chart's a refinement chart. It's going to take that big broad stroke of a brush and it's going to whittle it down to the point where the market is most likely to continue. You're going to be able to pinpoint your entries. It's going to be very accurate. It's going to allow you to reduce risk. It will allow you to increase your profit potential by refining this 1 bar into 20 to 30 bars. Nexgen gives you these 2 charts because they really are a reflection of who's in control of the market. It should have you thinking about who you're trading with and who you're trading against, guys. And the big charts are the large crowd, and the large chart reflects the large crowd of opinions of the market. It will define the direction, it will define the momentum, it will define the areas that you need to be aware of, because these are the men and women that get things done. They have the money, they have the influence, and if they wake up and want it to go down, it's going to go down. There is a small crowd. This is your small chart, and these guys put up a little bit of a fight every now and then. They create these little shoves against everything the large crowd wants. Small crowd typically fails 70 to 80% of the time, or maybe not fails, but they take their profits quickly. They know that they're trading against the large crowd, and you'll be able to pinpoint their failure, where they're most likely to give up their fight. This becomes your entry for the highest probability trend trade. So we're going to take the next hour. We're going to talk about the trigger line and the Fibonacci rules for the high probability trend trade. We're going to break them down individually. I'm going to show you what they look like, what they mean to you, how to study it. I'm going to give you a rock solid plan to take high probability trend trades. And really, I'm going to give you everything that you need. Within this first hour, hour and 15 minutes, you're going to walk away with everything that you need to be successful with the software. The only thing that I'm not going to give you guys is experience. That's the thing that I just can't. I wish I could. Your job is to listen, right? And to ask questions if you have questions. To raise your hand to say, Mark, I'm really pretty unclear on this one. I wish you'd go into it a little deeper. This is what I don't get. This is what I need help with. And what you're doing is you're just using this classroom, this conversation, to make sure that you get everything you need, whether you are evaluating the software, trying to make a decision, or whether you are working your way towards building your trading plan. Simulation is magical, guys. You can't lose money on simulator. You can't lose money asking questions, participating in class. So practice. Don't only simulate when you think you've got it down. When you're learning it, practice, practice, practice. I think I see a trade, let me take a trade. And what you're doing is you're learning how to enter, and you're learning how to move stops, and you're learning how to scale charts. But most importantly, you're learning how to read your charts, guys. And this is the first step in becoming confident. Post your pictures in the room. Let us have a conversation about what you see. And tell me, go back to those 3 rules every time. Talk about each rule individually through annotation. Talk about momentum and talk about whether or not you have that clear path. Show me where you entered and where you exited, because what you're doing every time you post in the room is you're saying, hey, Mark, this was my read. This is what I did. Did I do it right? Did I read it right? Was there a way to do it better? And it's like having a private session. We're going to simplify a lot. We're only going to talk about one trade for nearly an hour, if not a little over an hour. We're going to talk about how to enter, where the market is most likely to continue. We're going to talk about the advantages that get you to that entry. And you've got to know what it looks like. You've got to be able to break these looks down so that you can turn them into trades. And the easiest way to do that is to use that spreadsheet that Nexgen gave you when you downloaded the software. because this is going to do a couple different things for you guys. First, it's going to be your trade journal. Every time you take a trade, win, lose, or draw, drop it into this sheet. There are detailed instructions on how to paste links into here. There's detailed instructions on how to annotate in order to get to where you want to be the fastest. But the idea is that every time you post a trade in here, you're going to talk about advantages. You're going to take the feedback from class, write it off to the side, and I want you to come back and study it the next day. What did I do that was doing great? And what did I do that was costing me? And what did Mark say about the trades that I put in? Is there a way to do it better? Is there a way to avoid some of that risk? Is there a way to find higher profits, guys? And what happens is this little study each and every morning coming back to this, it's going to keep you focused on advantages. It's going to keep you focused on the patterns that are bringing you success. And then to that tune, if you give me 5 or 6 charts in the room, well annotated, telling me what you see, guys, I'm going to begin to recognize the things that you need help with, and we're going to work together to overcome any obstacles. But if you're not sharing, if you're not raising your hand, guys, I don't know what you need help with. So take advantage of having me live every day. On the spreadsheet, when you get to the second page, strong triggers, clear path, entry area, broken down individually so that you can commit them to memory, so that you know why they're advantages, what they look like, what it means to you. And then, of course, what it looks like when they're not met, because 90% of your day is waiting for these advantages. So it's pretty important to know what it looks like when they're not present. Your third tab is where you're just going to build your trading plan. When you are seeing the looks that you're going to commit to, you're going to take pictures, you're going to drop them in here, you're going to study them. You're going to be so good at knowing what it is that you're looking for that it's going to feel like it slows the market down. Eventually, you're going to have to manage trades. There's a section dedicated to you learning how to manage outside of the very basic. Once you get comfortable with this high probability trend trade, you're going to begin to see all the opportunities in the market. And I'm telling you right now, there are a lot of opportunities in the market using this software. We just keep it basic in the beginning so that you can become a chart reader. And there's a whole section dedicated to terminations. I could probably get away with it, or do away with it, because I've got it here as well. But guys, terminations are the most broken rules by new users. And then the final tab is this one here. This is where I've pretty much filled out my spreadsheet to make it look like yours should look over the next 30 to 60 days. All of these pictures in the green are Nexgen users taking advantages, turning them into trades. They're annotated, great study tool for you. Sometimes it's hard to study a live market. It's easier to study pictures. There's the entry sequences, short and long, for the high probability trend trade. There's a lot on management, but most importantly, a very mechanical management beginner plan right up here at the top. And then there's a whole patterns that repeat themselves, termination conditions. So the more time you spend on that spreadsheet, guys, the easier these looks become, the slower the market appears to move. And I say it every day, and I'll say it again, I think that the best way to get to where you want to be is not so much taking trades initially, but rather taking pictures and typing a lot. This is what it is, this is what it looks like, this is what it means to me. So a great thing to do is to start with rule number 1. It's rule number 1 for a reason. And your large chart, according to rule number 1, needs strong trigger lines. Because strong trigger lines create the advantage of momentum, guys. And momentum is so many advantages wrapped into one. So let's go through what it looks like to have strong trigger lines. And I'm going to start this lesson with trend, the easiest lesson that you'll ever get. Maybe unless you're colorblind, but I'll teach you how to overcome that if you are. Let me know. If the background is green on your large chart, the market is going up. And if the market is going up, you should be looking for rules to be met for high probability trend trades long, because that's what the large crowd wants. If it's red, it's going down. Same is true. We're looking for rules to be met for high probability trend trades short. When the background is green, the only way I can have strong triggers is if both the small and the large triggers are green as well. The colors need to match, and I think that is a great safety feature. If the colors don't match, you simply don't have strong triggers. Rule number 1 isn't met. It's okay to sit on your hands. But when the small triggers break above and away from the large triggers, when the large triggers are getting wide, it's this space created between the two that lets me know that the odds are favorable for the market to continue up. Odds favorable momentum. You're going to hear it in classroom. You're going to see it annotated on charts as OFM. And when I have odds favorable momentum, guys, the market is likely to continue in the direction of the trend. This is the same look that gives us the potential to break those key areas. And this is a look that really will cover mistakes that new users make very often. Momentum is the one advantage that I hate to do without. I love strength. I love that push. It's like a freight train. When the background is red, hey, good morning, Jay. Small triggers must be below the large triggers. Everything must be red. Background large and small. And it's the space created between the two, guys. That's what lets me know that the odds are favorable for the market to continue down. This is the look that gives me the advantage of momentum. And when those small triggers return and work their way back inside of the large triggers, guys, this is a weakness. It's a visual representation that your trend is weakening, that the force behind it is decreasing. And when I've got these weak trigger lines, anything can happen up or down. And I love the use of language here. Odds favorable to continue, anything can happen. Strong, weak. And when you start thinking like that and you start speaking out loud in terms of advantages, you're really letting yourself know what you're getting into. Good morning, Miss Cindy. So odds favorable momentum, guys. This is the best of the best. Happy Friday to you. And guys, this is what we're looking for as brand new users. This is that freight train cranking to the downside. Everything is good. And you will actually be able to watch momentum decrease as those small triggers return to the large. And with one line out, you've still got some push. There's still maybe opportunities as you grow with the software, but you can see visually that things are slowing down. And then once you get that weakness, guys, anything can happen. This is where sitting on your hands is typically the best bet. And when you get these weak triggers right at fibs, man, that's when fibs hold. That's when markets bounce. That's where we get these big untradeable bounces. And that's kind of what takes us to the second rule. Once I have strength, I need a clear path. But I'm going to ask you guys real quick. Is everybody good with this very basic look? Separation between the triggers is strength. Come on now. Separation means strength. It gives us momentum. Odds favorable. I'm telling you guys, I don't want to do without that momentum. I need that momentum, like a bullet out of a gun. Once I've got it, not off the large chart yet, I need to make sure that I have a clear path. I need to make sure that there's nothing in the way, that there's no key areas where the large crowd is likely to react. And the areas on a large chart, guys, these are where decisions are made. These are where buyers buy and sellers sell. These are the areas where the market can bounce, retrace, fight. And all they are really is horizontal lines on a large chart. They have names. This picture right here gives you the names. You're going to look for divergence line and divergence high and divergence low lines. And these are just lines that say, hey, look, there was a loss of momentum up here at the top, or there was a loss of momentum down here at the bottom. And that's really all divergence is. It's a loss of momentum. We're going to use Fibonacci resistance. We're going to use Fibonacci support, and we're going to use yellow one-to-ones. And each of these lines is a point where the large crowd might make a decision, where they may decide to exit their position, or where there may be an onslaught of the opposing force waiting to enter. So when we're defining termination conditions, the first thing that we let happen is we let the large crowd get to the area. We let them get to that decision-making point. And the easiest way to say that is price reaches the area. Those dynamic Renko bars make it up to resistance. Those dynamic Renko bars make it all the way down to support, guys. And as soon as price reaches a line on your large chart, you have to ask yourself, where are my triggers? Because the trigger lines are going to define whether it's likely to hold, whether it has the potential to break, or whether it's broken. So if I reach resistance and my triggers remain below, resistance is a termination condition. Rule number 2 is not met. I don't have a clear path. Absolutely no trades into that line. And if the market comes down and it reaches Fibonacci support, once again, all I have to do is ask myself, where are my triggers? And if my trigger lines are all above support, this is a termination condition. Rule number 2 is not met. I don't have a clear path. This is the most broken rule among new users, because there will be times where you don't find an opportunity all the way down to support. And by the time you get to support, you feel entitled to get into the market and make some money, guys. And I see a lot of money lost trading into these key areas. When resistance stops the market, triggers remain below, and it reverses. We call this a strong top, and a strong top is the precursor to the highest probability trend trade short you can take. If it reaches support, the triggers remain above, and those large triggers pinch and roll, this termination condition turns into what we call a strong bottom. And a strong bottom is the precursor for the highest probability trend trade that you can take long. So guys, lines on a large chart can stop the market. And if you don't think that's possible, watch this. From support to a divergence high, to support, to resistance, to a divergence low, to a divergence high, to a divergence low. Son of a gun. Guys, rule number 2, full-blown effect. You got to learn it. You got to respect it. This is going to keep you out of a lot of trouble. But areas break, guys. If they didn't break, crude oil would be trading at the same price forever, and no one would have anything to bitch about. And areas break when the small triggers and the large triggers, both lines of both, make it through the line. So if the sellers are in control, they're coming down, they hit Fibonacci support, all of us in this room say, wait a minute, my triggers are above. Let me sit on my hands. Let's see what happens. Let's see if there's a bounce, or let's see if it breaks. And if it breaks, small and large get below support, well then support's going to behave as resistance. And if support's behaving as resistance, and my path is clear, guys, there may be some opportunities. So termination, clear path. Termination, price reaches the area, trigger lines are below, smalls and large get above, resistance behaves as support, the path is clear. And guys, your path will be clear until you reach the next line. And every line that you meet, you have to start the process over. Price reached an area, where are my triggers? Well, most lines are going to be a termination condition, even if it's for a fraction of a second. You're going to pause when you get to a line. And when I talked about those, where is the market likely to go? Guys, the market with all this momentum is likely to go to this blue line. It's a wonderful idea for many people to get paid at these key areas and then pause and wait and see if they break. So 2 options for the brand new user. It's either a termination condition, don't trade into the area, or that area breaks. Let's look for the rules to be met. Let's take those short trades until we reach the next area. Is everybody feeling all right with that? There's rule number 2, keeping us out of trouble. There's an instance where both the small and large get above the fib. You'll notice that it pulled right back to the fib and continued up. Weak triggers, there's a reversal. We bounce off of resistance, back there, pushes down. And with weakness, there's that push up. Strength can break areas. Guys, if you scroll back a little bit, you'll see that areas break all the time. But you'll see that those rules for termination conditions, they work more often than they don't, guys. They're going to keep you out of trouble more often than they won't. And you know exactly where they are. So keep it very basic in the beginning. Let it either be a termination condition or let it be a clear path. Let those be your 2 options. Once you're good with those 2 options, once you can identify them quickly, it sets you up for your second trade, guys, this medium probability trade. Areas break all the time. They do. It just happens. We can begin. Both triggers were above, but the small... You're absolutely right, Tracy. And Tracy, that is such a good observation. And let me show you one of the things that happens as we're new. Because we are going to piece these together, right? We're going to piece these together. And Tracy, you said, wait a minute, Mark. We have weak triggers. So rule number 1's not met, right? Everybody sees it. But just because rule number one isn't met, well, it doesn't mean that we don't have a clear path. It just means that we are void of rule number one. We don't have the advantage of momentum, but we do have a clear path, guys. And that's when we begin to look for what we call medium probability trades. Because remember, it takes three advantages. It takes three advantages to create that high probability trend trade. And if one of these advantages go away, we call it a medium probability trade. And if two of these advantages go away, we call it just plain silly to enter the market. So Tracy, you did it perfect. You got the clear path, but you don't have the momentum, which means that if you're talking about advantages, you're going to see if you have a rules met entry. And that would be a medium probability trade. Great observation. And you can see it here too. Both triggers break through, but I don't have the best momentum. No, that's not what I'm saying. So watch this. Let me see if I can do it like this. Let me take a picture of this, Tracy. A trade is these three things, and it has to be these three things for it to be a high probability trend trade. And I'm going to draw three boxes here with my call out box. And I want you to see something. So Tracy, if it takes three advantages to create a high probability trend trade, and we're going through these advantages one by one, right? If I have momentum, if I have a clear path, if I have an entry area, I have the best of the best. I'm getting into that market. But if I don't have momentum, Tracy, automatically what your brain has to tell you is that 33% of the best are no longer in play, which means that I'm looking at 66% advantages rather than 100, which means that I can't be a high probability trend trade. This puts you into what we call a medium probability trade. And a medium probability trade means that there's an issue. Your issue is that you don't have momentum. Your ability to read charts is going to insist that you have a clear path, and it's going to insist that you have an entry area. If I get rid of my clear path, well, that's another 33% missing, right? And this is where you have to ask yourself, and this is why we talk about advantages and why I want you guys to focus on advantages. If I only have 33% of the good stuff, do I really want to be in a trade? And this is a question that only you can answer. So Tracy, just because momentum is gone doesn't mean that there may not be an opportunity. But what it does mean is that you have to be very aware of the other conditions and make sure that you're not sacrificing any more advantages. Does that make sense? Here we had odds favorable and a clear path. That's a great look. Here we had weakness and it looks like a clear path, but since we gave up momentum, might have made the decision, I'm just not going to take this trade. And look what happens. So you guys will get to the point to where you get real loud, where you say to yourself, I have momentum, I have a clear path, and you're going to start to feel confidence from that chart read. So if price reaches and no triggers break, it's a termination. And if smalls and large get to the other side, well, that's a clear path. And if I couple that with momentum, I'm looking for that high probability trend trade. Rule number one is momentum. Momentum can break areas. So we're going to use the trigger lines to let us know when areas have the potential to break. When the small triggers absolutely smash through an area, but the large triggers are lagging behind, guys. With odds favorable momentum, 6980 has the potential to break. It has the potential to break, which means if we go back to that cool picture, and this kind of helps you out a little bit, I have momentum, but I don't have a clear path. Well, I better insist on the perfect entry. Does that make sense, Tracy? Because I think this kind of plays right into what you were saying about weak triggers and a clear path. I have momentum, but I don't have a clear path. It doesn't mean that there might not be the perfect entry. I could still take a medium probability opportunity. And guys, medium probability trades are going to be most of your trades. Right here, it had the potential to break. Ultimately, it did not, and it changed direction. Here it has the potential to break. You still get the reaction at the fib because decisions are being made, but the decision was that the buyers were going to continue in the direction of the trade. So I'm going to give you a rock solid plan for this trade as well. But if you don't understand termination conditions, it's going to be difficult to see. If you're not good with momentum, you may make the mistake of trying to take what you think is a 50-50 trade, a medium probability trade, but because the triggers are weak, you've already forfeited 2 advantages. Kind of neat how that works, isn't it? So I tell you guys all day long, be vocal, be loud. Every time you look at a chart, say the word momentum out loud. Do I have it? Say that phrase. Do I have a clear path? Is it a termination? Is it a clear path? Or am I only working with the potential for this area to break? And if it's just the potential, I'm going to insist on the rest of the goodness. And guys, that's termination conditions. It really doesn't have to be hard. Most of your trades are going to look like this, but you have to understand momentum to really be able to capitalize on them. And then the one thing that you're going to realize is that there will be times when your path is not clear because areas are stacked a bit. This is frustrating for new users. One of the biggest misconceptions about day trading is that you are going to be busy all the time. You're not. You're going to do nothing more often than you're doing something, guys. And when you get stacked areas like this, fib divergence, you may never end up with a clear path. It may take an hour and a half. It may take 12 minutes. There's no telling. But this is 90% of your day. And I want you to write it on a piece of paper, tattoo it backwards on your forehead so you see it every time you look in the mirror. It's okay to do nothing. Every dollar's not your dollar. Every tick is not your tick. The futures markets trade billions of dollars every day. You need to capture 400 of those billions, 400 out of billions, to have a 6-figure income with your trading. So it's not necessary to be in every move, guys. And rule number 2 shows you exactly where the large crowd is most likely to make decisions. It shows you where the move makers are going to react. And rule number 2 is going to keep you out of consolidation and chop. And 90% of your day is waiting for that clear path, waiting for that momentum, waiting for everything to come together perfectly so that you can take a trade that typically wins more than it loses. And guys, I took this picture. This was the S&P where rule number 2 is keeping you out of chop. But I really think we've got an awesome example right here. This is crude oil. This is live. This is live. And rule number 2 is keeping you out of trouble. And if you thought you were going to go short, you lost. And if you thought you were going to go long, it didn't work. And if you were like, well, it's got to go down from here, you gave your money away. Guys, the difference between the most successful traders and the people that struggle are the people that are successful know when to do nothing, and they know what they're looking for. So when it's time to react, they react. And Ron C. just put it in the room. He sat for 3 hours with no trades. And then he found 3 in 5 minutes. 3 hours doing nothing, 5 minutes, 3 trades. I love it. So be okay doing nothing. Be okay sitting on your hands. I showed this yesterday. I'll show it again. I have a link to MSN Casino on my computer because this is what I do when I'm not waiting for trades. To the tune of 10 billion. That's how long I have to wait in between trades sometimes. So have a distraction. Listen to music, draw a picture, play solitaire, whatever keeps you from making bad decisions. So if you guys would do me the pleasure of giving me a why in the room. Are you comfortable with the idea of momentum? The separation between the small and large can push a market, can break areas, can cover mistakes, guys. This thing is amazing. And then once I have momentum, I have to make sure that I'm not trading into one of those lines. And I'm going to tell you, with momentum and with a clear path, you have everything that you need to be successful. You have everything that you need to make good decisions, to have a trading plan that is profitable and consistent. And guys, these are the 2 that I want you to get really good at initially. You will find your entries. And once you have these, remember, we're going to go to a smaller, faster chart. And we're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. We're going to use a limit order because it's going to be that precise, picking out where the market is most likely to continue. We're going to do it in an area. On the large chart, areas create negative bounces, nasty things. On the small chart, these areas give you the bounce you need to go in the direction of the trend, but we want them buried inside of triggers, guys. And here's the deal. If I have momentum, if I have a clear path, and I go to my small chart to find that point, and I see 3 divergences, 3 losses of momentum from a low or a high, I have to pump the brakes. This is the only time on a small chart, on my entry chart, where I have to tell myself I will not look for that short trade. I will not look for that long trade, because the small chart is showing you change that you can't see on a large chart. And those times when the large chart seems to turn from the middle of nowhere, not at an area, very often there's 3 divergences on the small, 3 losses of momentum. And it becomes even more powerful with weak triggers. That same lesson from rule number 1. And it's more powerful still with what we call a head and shoulders pattern. But it really just means that that last pivot is higher than the previous or lower than the previous from a high, guys. This is the only time where I will let the small chart talk me out of a high probability trend trade. The only time it will talk me out of a high probability trend trade, not necessarily a medium probability trade. So I have momentum, I have a clear path. I'm going to go to my small chart and I'm going to use a limit order to buy or sell a pullback, that fight created by the small crowd at an area inside of triggers, and more specifically for the brand new user, inside of what we call favorable large triggers. One of the phenomenons that happens on these charts all the time is that price returns to the large triggers. It breaks away, it pulls back. It breaks away, it pulls back. This is true on every chart, guys. Large chart, small chart, range chart, day chart, stock chart, options chart, doesn't matter. Price comes back to the large triggers. So what we've done is the small chart already has large triggers. They're smooth. I'm going to use these trigger lines to see that separation, to say, wow, look at the momentum on the small chart. But then we've put the large triggers from the large chart. They're a little stepped. We call them synthetic triggers. We've superimposed them onto the small chart. And what this does for me is if price returns to large triggers, I know that it may come to the small chart large triggers. I know that it may go to the large chart large triggers. And if they are flowing one on top of the other, like 2 snakes riding piggyback, guys, I've got the best of the best. I have the least amount of space there to shoehorn in some areas, fibs, mid bands, 1-to-1s, because it's the areas inside of triggers where I anticipate the bounce. So when I'm looking at my small chart, price may retrace back to the large triggers. And inside of those large triggers, I have 1-to-1s and I have Fibonacci support. Either of these areas inside of these triggers may create a bounce. But in my large triggers, my synthetic triggers, large chart large triggers are down a little bit. They're still overlapping, and price may return to these synthetic triggers. And inside of the synthetic triggers, I have a midband, and that may produce a bounce. So what you guys are going to be able to do is use the idea that price returns to triggers, to the large triggers, and that areas inside of those triggers may produce a bounce, and you're going to create this window where the market is most likely to continue. You're going to create this window where you want to enter, where the small crowd is most likely to fail, and the process of doing it repeats itself every day on every market. When the large chart says up, when the large chart has odds favorable momentum, when the large chart has a clear path, your small chart is full tilt boogie to the upside, guys. It is cranking up, and you start thinking to yourself, oh no, I'm never going to get in. The market's going up. I'm not getting paid. This sucks. What am I going to do with my life? And then the small crowd shows up, and they give you a reversal bar. And a reversal bar means that after all of these green bars, you get a red bar. This red bar signals the beginning of the fight. It signals the beginning of the pullback. The reversal bar is not your entry. It says, hey, let's look for those trigger lines, large and synthetic. Are they overlapping? Are they one on top of the other? Are they favorable? And then you say to yourself, but those trigger lines are not my entry. I need something for the market to bounce off of. I need fibs, mid bands, and yellow 1-to-1s. And I need them tucked inside of those favorable large triggers, guys. And this is how you create your window in a long trade, from the highest point of support closest to the reversal bar all the way down to the lowest point of support inside of favorable large triggers. This is the area where the market is most likely to continue. This is the area where the bounce is most likely to happen. So if we color code a little bit, the white arrow shows me where price may return. It may go to the top of the triggers or the bottom of the triggers, and anywhere inside of these triggers, I have to anticipate that my price bars are going to go there. And then we change colors. Whoops, changed them too soon. Nope, we'll just keep that one yellow. We'll go magenta. Stop it. Magenta's where price is likely to return. And then if I come here, this mid band inside of favorable large triggers is the first spot where price may ricochet and head off in the direction of the trend. But these 1-to-1s inside of favorable large triggers are the second spot where price may bounce, where price may continue in the direction of the trend. Areas inside of favorable large triggers. Anything outside of those triggers, anything beyond those triggers, anything outside of that window, guys, this is where losers happen. This is where we're going to take small losses. This is where the market should not go. So your ability to pinpoint where the market is most likely to continue also sets you up to understand where the market shouldn't go outside of those triggers. Because of the momentum, because of the clear path, guys, your limit order for entry is placed a tick or two above the highest point of support inside of favorable large triggers. And this is your entry for the highest probability trend trade. For a short trade, we're waiting for the reversal bar. We're sitting on our hands. We're chomping at the bit. When the reversal bar prints, you're going to say out loud, that's not my entry. Let me look for my trigger lines. Are they wide? Are they angled in the direction of the trend? Are they overlapped like two snakes riding piggyback? If they are, they're favorable. This is the best of the best. Let me look for areas inside of those triggers because that's where bounces happen. I have one area, a mid band. My limit order goes 2 ticks below that one area. This becomes my entry for the highest probability trend trade. Anything on the wrong side of those triggers, whether it's a mid band, a fib, or a 1-to-1, anything on the wrong side of those triggers is sitting in an area where the market should not go if this trade's going to be a winner. This is not where we want to enter. This is not where we want to put a limit order. Guys, this is where your initial stop placement is going to go. And it's going to be your ability to recognize where the market is most likely to continue that's going to allow you to start your management process of putting your stop where the market should not go. Is everybody with me? Momentum leads the way. Clear path lets you know that there's room to your profit targets. And guys, we're just going to find that point where the small crowd fails. This becomes your entry for the highest probability trend trade. You have to study, you have to practice, you have to learn. And guys, this is the best of the best look. Once you know where the market is likely to continue, you know where it shouldn't go, this is your first stop. Anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. So guys, if you take 10 high probability trend trades, how many can you expect to lose? Is anybody good at math in here? If I take 10 high probability trend trades, 3, exactly, Tracy. Tracy, do you get to pick which 3 that you're going to lose? Of course not. We never know what the market's going to do. So what happens, I know, right? So what happens is we have to be consistent in our actions. We have to insist on momentum. We have to insist on a clear path. We have to pinpoint our entry and take it as the rules dictate. That's what creates that win-loss percentage, guys. And what I've just given you is the best of the best. Pull back to an area inside of favorable large triggers. This is when it's easy. This is when it's effortless. This is where you're going to be like, man, there is no way I'm not going to take this trade. Because I can't force my opinions on the market. All I can do is trade a pattern that wins more than it loses. But guys, this is not always the look. We covered this yesterday too. Jerry had the question, well, what do I do if my trigger lines aren't one on top of the other? What if they're not like two snakes riding piggyback? What if it's like two snakes, I don't know, drag racing up the beach, right? Price may return to these large triggers. I know that. I studied, I listened. But price may also return to the synthetic triggers. Mark, that's a lot of indecision. And just to compound it, Mark, I've got a mid-band up here, but I've got a fib down here, and I know that my stop goes beyond the triggers where the market shouldn't go. How can you possibly expect me to put this much risk on a trade, Mark? What am I thinking, right? Guys, some of you are cool with it. Some of you will accept that much risk. Some of you say there's no way. I'm going to wait for the fib because my risk is smaller, but what if it goes from the mid-band? So guys, when you have these split triggers, when you have multiple areas, when there's a lot of space between them and you know where your stop has to be, one of the things you can do is you can wait for a reversal bar, a confirmation bar, something that says to you, we are going in the direction of momentum. We have accelerated in the direction of that clear path. We have bounced off that area and started moving up. Your risk is defined. It can go 2 ticks behind this reversal bar. There's a cost for confirmation, 6 to 8 ticks. But now your risk is established. So if they do decide to go all the way down to this area, you can take a small loser and you can even re-enter. But you're not leaving $300 to $400 risk hoping that the mid-band is the area that holds, guys. And this is one of the great things that you can do. You'll pay a little bit for confirmation, but you'll make it back tenfold in what you don't give away if this is part of your 20 to 30%. So we've got to learn the looks so that they're easy. Got to learn the looks so that they're easy. This is the easiest way to do it. Not taking trades, guys, going back historically. We'll do it together. When the large chart has strong trigger lines, when the large chart has no termination conditions, if you scroll back historically, you're going to see these bars that look like they have tails. This tail is the pullback. We don't trade tails because by the time we know it's a tail, the market's all the way back up here. So what we can do is we can go back and circle these tails. And if that tail lines up with an area inside of triggers, guess what? That's your trade. Take a picture, annotate it, and ask yourself, hey, do I get it? Do I understand it? Is this my look? Hell yeah, that's my look. Let's get in at the highest point of support. You've got to develop trust in this look, guys. You've got to learn to understand what it looks like when the rules are met. And I'm going to see if I can find a good example. That's all 1, 2 in the morning. I know that there was 1 or 2. And this is a good focus on how sometimes you're going to do nothing. I'm looking for one that even has the potential to break. Let's go to a different market. Crude oil's got some indecision going on. This is the S&P. So that looks like a rock star example. This was about 8 a.m. this morning, guys. Can you give me a Y if you see the odds favorable momentum? Can you give me a Y if you see that the trigger lines are above the areas? That's a pretty good look, wouldn't you say? Man, that's what we're looking for. Let's go see what that looked like on a smaller, faster chart. I love it when this happens. And guys, this is this morning. This is not me handpicking a trade for you. Odds favorable, clear path, pull back to support inside of favorable large triggers. This is what we talk about for an hour every day, is being able to recognize this. And I'm going to show you something pretty cool. Let me get rid of this. Guys, this is what the market looks like when it's time to take a trade. Well, hell, that one did the same thing, didn't it? The market will be trending up. The small chart will be trending up. And you're going to start saying to yourself, man, it's going without me. I didn't get in here. I'm never going to get paid. I'm going to jump in. and everything's going up, and the fear of missing out. Is everybody familiar with that acronym FOMO? The fear of missing out? That feeling that makes investors make silly choices? This is where it happens right here when you're wishing that you were in a trade. And I want you to see it. Boom, 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 boom. All the way up to the reversal bar. Awesome, Gary. There's your reversal bar. This signals the beginning of the pullback. It's not my entry. My large chart still says up. My large chart still says clear path. Guys, am I worried about one divergence on a high probability trend trade? How many does it take to keep me out of a look like this? Do you guys remember? Takes 3, Jeffrey Dean. So what am I doing? Once I get the reversal bar, I got to look from the top of my triggers to the bottom of my triggers, right? This shows me where price may return. And then I'm going to refine it to create the window of opportunity. From the highest point of support to the lowest point of support inside of favorable large triggers. Guys, what do you think? Your window of opportunity is literally 1 tick wide. Is everybody with me so far? Because this is the repetition that we're going to go through so that we can do this in the moment when the market is moving. Your job is to activate a limit order a couple ticks above that mid band. And then wait. And the market comes down and you're still not in a trade. And the market comes down more and you're still not in a trade. And you're not in a... Oh, there you are. You're in a trade, guys. You're in a long trade. And not only are you in a long trade, you're in a long trade with odds favorable momentum. You're in a long trade with a clear path. You're in a long trade having entered at the point where the market is most likely to continue. Is everybody with me so far? Where does my stop go? Approximately 4 to 5 ticks below the trigger lines. Let's go crimson. Red is a good one for the stop. Let me make it a little bigger. There's your stop placement. And then it comes down again and you see red numbers. And you start saying to yourself, oh no, it's going to blow right through here, hit my stop, I'm going to lose all my money, my wife's going to leave me, my dog's going to bite me. I hate Nexgen and I hate Mark Novak. And it does it again. And now you're mad at my wife and you don't even know why and you want to kick my dog. And you're like, gosh, why did I show up to Nexgen? And then you get that magical reversal bar. And your stop comes all the way up here. And you're like, oh, Nexgen's awesome. Talk about picking your entries. And with all that momentum and a clear path, telling you guys, that doesn't suck, does it? What a great way to make money. And I want you to see why you can go back and circle tails and commit this to memory. If I circle the low point right there at my entry, and I click over 1 bar, it's right on the end of that tail, guys. And this is how you're going to study. This is how you're going to go back and you're going to begin to create trust. My triggers are split. I've got areas under the large and over the synthetic, and one in the synthetic. Nothing to do in these triggers, everything to do in these triggers, and look where it went to the area inside of the trigger line. Pretty cool, right? So let's back up and let's see if we get another rules met trade. But Mark, you're going back so far. How can I ever make money if I don't trade every second of the day? Well, there's one right at about noon 45. So I'm going to scroll back. Bum, 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 bum. I'm the worst scroller ever. I know it. Oh my gosh. right back to resistance inside of favorable large triggers. Guys, I can't make this up. This is a real market, a real chart. What did it look like up here? Ooh, that's that split trigger lines. There's your reversal bar. And it worked out beautifully. So guys, I'm going to ask you one more time because it's what I like to do. Is everybody cool with the idea that when you have momentum, when the path is clear, this is your most likely point of entry? Areas inside of favorable large triggers. And even with momentum, if the path isn't clear, it should be a deal breaker for you. And guys, that's my first hour every hour. That is the beginning of your journey. You've got to learn these looks so that they become easy. You've got to recognize 3 very simple advantages so that you can piece them into a trade, guys. So in order to get to where you want to be, you've got to be able to recognize these looks. So I encourage you, don't force you. I can't make you want to be rich. Take 25 pictures of strong triggers, take 25 pictures of weak triggers, and know the difference between the two. Take 25 pictures of a clear path and take 25 pictures of a termination condition and know the difference between the two. Take 20 pictures of a long entry and of a short entry and know exactly what it looks like to get into that market so that you can put your entry in the correct spot, so that you can reduce risk, so that you can maximize your profit potential. But the task is not to simply take pictures, guys. Annotate the charts with the whys. I think the whys are hugely important. Why is it strong triggers? Because there's a separation between the small and the large. What does that mean to me? It means that I have momentum. It means that I have a market likely to push. Rule number 1 is met. Well, why is it a termination condition? Because price reached an area and my triggers didn't break. What does that mean to me? It means that I don't have room to my profit targets. It means that rule number 2 isn't met. It means that I shouldn't take that trade. And you will ultimately piece together these looks to create a trade. So guys, go through this. I can't make you, but I can tell you that everybody that's done it has been insanely happy with the results. As you go through and take these pictures, I'm giving you the high probability trend trade checklist sheet. And the top of it is what it looks like to have a strong top or bottom, that termination that reverses the market. It reminds you what it looks like to have momentum, and it reminds you loudly that anything can happen with those weak triggers. It defines terminations, it defines a clear path, and it carries you over to that potential to break look, that second trade that you're going to take. And then it shows you exactly how to pinpoint where the market is most likely to continue. So as you take those pictures over the weekend, as I'm sure that you will, use this sheet to make sure that your pictures are right. Make sure they're accurate. And if you're still just not sure, drop your pictures in this room and say, Mark, I need just a little bit of feedback on my chart read. I want to make sure I'm doing this right because I understand the potential. The second page is the trend trade checklist, the high probability trend trade checklist. And guys, these are the 4 conditions that give you the best case scenario. The first one, is it coming from a strong top or bottom? Was there a termination that reversed the market prior to the rules being met? If there was, total warm fuzzies. If there wasn't, it's cool. We can still take the trade. We just might have to be a little more aware for exit conditions. Was there odds favorable? Was there no terminations? And guys, this language is so important. Was there an area inside of favorable large triggers? Nobody has ever marked yes to each of these, truthfully, and done worse than 70% that I can ever recall. I've had engineers test this over a year and come up with closer to 83%, guys. This should be printed out and put on your desk. You should be policing yourself. You should be writing these words on your chart every time you take a picture. I'm going to give you that as well. And then I'm going to give you your trading plan, guys. As a brand new user, this is your trading plan. As a brand new user, this is going to give you the highest chance of success. This is a stepping stone on your learning journey. This is not the only trade. This is the first trade. Ron said it yesterday. And I think that this is such a big deal. Thank you, Cindy. Guys, news in 2 minutes. Once you know the high probability trend trade, like the back of your hand, you're going to see all of the other opportunities. But if you try to chase everything before you can do the best thing, you will struggle. I see it all the time. This KISS plan, the Keep It Simple Sunshine plan, will optimize your chances of success with the high probability trend trade. Ultimately, it'll optimize your chances of success with that potential to break 50-50 trade. But we've got to get through the first one first, guys. Through simulation, study, class feedback, and continuous practice, you're going to create your own trading plan. I'm not shackling you to this plan. I'm not forcing you to follow this plan. But I'll tell you, as a brand new user, this is the easiest way to get to where you want to be. This is the one that gives you a trade that wins more than it loses. This is the one that teaches you to read your indicators. This is the one that creates confidence through the memory of success, guys. And the simple plan for consistency, all bold letters. I should put this in like red. I'm just going to change it up, guys. Don't fight the large chart. Don't fight the momentum on the large chart. The large crowd wants it to go up. It's going to go up. You're not going to stop that. Don't trade into those areas on the large chart. They're going to make decisions there. You don't have to guess if it's going to hold or break. Simply let it. Define your entry. Get into the market where the market is most likely to continue. Guys, great entries create manageable trades. Great entries reduce risk. Great entries put you into the market where the market is most likely to continue. And guys, this is your highest chance of success as a brand new user, because not only do you know exactly where the bounce is supposed to happen, most likely to happen, but you know exactly where the market should not go beyond those triggers. This is your first stop placement. You're managing this trade by having odds favorable momentum. Good morning, Abdulaziz. You're managing this trade by having a clear path. You're managing this trade by getting in where the market is most likely to continue. You're managing risk before you ever manage profit, guys. And your final management tool is to put your stop where the market shouldn't go. And if they don't hit that stop, if the small crowd can't push, they're going to give you one of these reversal bars, right? It's going to be one or the other. And that reversal bar will be your first stop movement. The reversal bar says, we're going down with momentum. We're going down with a clear path. We're going down from the area where the market is most likely to continue. This trade is doing everything you hoped it would do. So let's get that stop 2 ticks above it. Let's reduce risk. Let's make sure that if they change their mind, we take a smaller loser. And then from here, there's nothing to do. Put your hands on your head. Scratch the dog. Sit on your hands. Roll back from your desk. Whatever you have to do to not move stops and targets. Your first target is predetermined, guys. It is $100 away from your entry. And if they don't come get your stop, guess what? You just made money. You just took a successful trade. You got $100 in your pocket. That $100 feels good. Some of you are like, it's only $100, Mark. It is only $100. I'm not stepping over a $100 bill on the sidewalk. Neither should you. $100 creates confidence, guys. That's success. $100 assures that you're in a winning trade. $100 tells you to take all of the risk off of the trade. Move your stop to break even. You have nothing to lose and money in your pocket, and this gives you the courage to sit on your hands and do nothing, so that you can either get your second target hit, and it's only $200 away from your entry, or take an absolutely painless break even on the second, which means you still have $100 in your account. But if it hits that second target, guess what? That's a $300 trade. That's $300 in your account. That's $300 that belongs to you, guys, and $300 a day. If that is the best you can do on that dismal day with no setups, that's 75 grand a year. Guys, that's not so bad. That's probably more than the average human makes here in America over the course of a year. That's a 20-year, tenured teacher in Florida. I know that from a friend of mine. But guys, once you get good at this and have a plan, it's not going to be difficult to find yourself down in this range. And then the cool thing is you can take that exact same plan that's netting you 400 and double it, right? And suddenly 400 is 800. You can use those mirrored accounts, the copiers, and you can make $100 be $1,000 a day on 10 different accounts. So the idea that I'm trying to stress right now is get paid as a brand new user. It doesn't have to be a home run. Get paid. Get on base. Do it the easiest way. Learn to read your indicators, guys. And the same thing with management. You'll craft a plan tailored to your personal goals based on your ability reading the indicators. And what happens is you begin to see things where you have odds favorable momentum, where there's absolutely nothing in your way, and you're going to start saying clever little things like, you know what, with this look, this market has the potential to make that next fib. That's where my next target's going to go. And the only thing that's going to take me out of this trade is multiple divergences on the way down there, right? So guys, you're going to turn $300 trades into $700, $800 trades. And here's one of the things that helps posting in the room. This was from a client. He dropped this in here, and he takes the perfect entry and has all the best conditions. And when he posted, I was like, this is an awesome trade. You made over $200 on this trade, one contract, but I want you to notice that there's odds favorable. I want you to notice that there was room to that next fib. This is the kind of look where you can stretch out that 5 points and turn it into 10 points. And guys, that is a huge, huge factor in getting the profits that you need out of the market each and every day to meet your financial goals. So keep it simple, keep it focused, get paid. And then my ominous warning to all of you new users. First thing, use Simulator. Guys, there is no threat of loss on Simulator. You can't lose money participating in class. You are practicing your plan. And then once you practice your plan and you're good at it, Morgan, hit F5 and that'll rewrite Ninja script. And then once you think it's time to go live, guys, you have to know the two things. You've got to know what it's going to take to enter and what it's going to take to exit. And guys, your rules are patterns. I'm going to get rid of should. Because what a silly word, right? You guys aren't going to do that. Rules are patterns. Proven to win more than they lose. The more consistent in your action become, the more consistent in profits you're likely to become, guys. And your process yields the results. And I can't stress this enough. It's the execution that is the advantage. It's the execution of the entry, of the management. It's the taking the trades that have been proven to win more than they lose. And your rules, when you don't know what's going to happen in the market. And I'm going to tell you right now, you don't know what's going to happen in the market. But if you know that this trade, if you go back and test it over 100 trades, wins 70 to 80% of the time, you know that you're going to come out on top, right? And you have to know why you'll exit. So I give you that one too. I'm going to save that. And I'm going to put all of these in the room right now for you. Each and every one of them. I'm going to close a lot of stuff out here just because why stress the computer, right? Man, it just keeps going up. So right now I'm going to give you guys the tracking sheet. Again, steal mine. I don't mind. I'm going to give you PDF versions of the Chart Reading 101. I would encourage you to go through that process to learn how to read your indicators in their most basic form. I'm also giving you the exit conditions, the KISS plan. I'm giving you Chart Reading 101, the daily goals. And I'm also giving you the one in there that says order of picks. And that is the PowerPoint that I use to teach each and every day. And this morning I told you that I would give you everything that you needed to be successful with the software. I've just done it. You know the rules of the highest probability trend trade. We have broken down exactly what they look like and what they mean to you. I've given you sheets on how to study them. I've given you a spreadsheet with almost 500 pictures where you can go through and analyze. I've taught you how to back test them. And I've given you a rock solid plan to follow. Now all you need to do is practice, post, get feedback. Are there any questions? And then I'm going to follow up with Kurt's here, sorry. So Morgan, when you open your indicators, Gemify, order line decorator. Have you gotten that far? Have you put an order line decorator down here? Cool. So once you do that, click on your chart and hit F5. And that'll reload your Ninja script. And that's what gets it active. And it's only active to this one chart. And then once you do that, once you get in, it'll show you exactly what it is that you're looking for. Let me know if you need help. Good stuff. All right, guys, I'm going to take 10 minutes, 5 minutes, probably not really 10. That's a lot. Waiting for the reload. Right on. It takes a second. When I come back, we're going to look at all the charts that were posted, and we're going to go back to them. Momentum, clear path, and entry area. I'm not going to grade you on what type of charts you post. I'm not going to grade you on whether you won or lose. What we're going to do is we're going to talk about these advantages. We're going to point them out, whether they're present or whether they're not. And then once we talk about the advantages, I'm going to look at your entries. I'm going to look at your exits. And I'm going to say, hey, I want you to notice that you jumped in early and that increased your risk. And the market came exactly where it was supposed to. This could have saved you a little risk, and it could have gotten you more profits, right? I noticed that you jumped out of the market really early. Let's look at the advantages that are still in place and see if you can find the courage to hold a little longer. And guys, it takes courage to manage trades. It really does, which is why mechanical is so imperative in the very beginning. But we're going to do that. If you will do me the favor, every chart you post in this room, momentum needs to be described. And if you don't know, I want you to put an IDK. Isn't that what the kids do in text right now? I don't know if I had momentum, Mark. Help me with the chart read. I'm not sure if I had a clear path. Help me with the chart read. I don't know if I took the right entry. Help me with the chart read. Guys, guess what my job is? My job is to help you with the chart read, which means you have to tell me what it is that you see. So I'm going to come back. We're going to do that. This market is absolutely screaming to the upside. NASDAQ's doing the exact same thing. And crude oil finally tried to break out. And the buyer said, no, we wanted to get to that fib. We'll see if they do. Guys, I'll be back in 5 minutes. Go stretch your legs. But right now, I have odds favorable momentum. Right now, I have the potential to break. Who knows? There might be a medium probability trend trade in there. I'll see you guys in 5. All right, guys, I am back. Is it just me, or was that a pullback right to support right at the bottom of the area where price was most likely to return? And is it just me, or did all that momentum take us right up to the next key area? I hope you were paying attention in the first hour, guys. That was a pretty good one. So I'm going to scroll to the very top of the room. I'm going to start clicking on some of the pictures that you guys have posted. We're going to see what we can do here. Jen got us going this morning. Or maybe this was yesterday afternoon. That was yesterday. We saw that one, Jen. Great trade. That's the one I was thinking of. So Jen's looking for the old chili dog here. Momentum trade, she says. She's not a trend trade. This is a momentum trade. And Jen says, with a momentum trade, I need momentum. I need to get past trouble. And I'll just jump in with all that momentum. I'll get a little bit of money. I'll get a little bit more money. Beautiful. Perfect. Odds favorable momentum and clear path for the win, guys. You're going to hear me say that a lot today. All right. Pete says, first trade of the day, warm up and sim. Trend was up, but no longer odds favorable momentum. Had a little trouble getting through those fibs. So the translation is I traded into a termination condition, but everything set up. The momentum was good. It had the potential to break, and there was no divergence, and I knew exactly where I wanted my entry to be at very low risk. If I were in a live account, I would have been out here with a profit stop. In a live account, I would have taken this add-on, especially with two divergences, and it did what it was supposed to do. Blew right through it. And you know what? Here's one of the things that I'm going to say, and this is where I get preachy, and most of you guys don't want to hear it. I'm going to tell a story because it's Friday. Back in a different life, I used to road race motorcycles. And most of you have heard this story. Some of you haven't. And anyways, we're out in a practice session, Texas World, having a blast, and I'm at like 60%. And I'm just out there dragging my knees on the concrete and doing little wheelies coming out of turns and having fun. And a buddy of mine blows by me and gives me the stink eye over his shoulder as he passes me. Well, when we get back in the pits, I'm good, whatever, we're having fun. And he comes up to the pits and he looks a little put out and he's like, Mark, what the hell are you doing out there? And I was like, man, it's practice. And he goes, yeah, but if you don't practice like you want to perform, how are you going to perform when it's time to perform? If you do everything at 60% when you're learning your craft, how are you going to be able to step it up to 100%? It's a completely different area. And guys, simulator's kind of the same thing. You should be practicing like you want to play. You should be taking trades that fit your plan. You should be doing things that fit the advantages. Because when you take silly trades and they win on simulator, you start taking silly trades expecting it to do the same thing live. And man, I'm telling you, it's like they have cameras. It will blow up in your face more often than it does not. First trade in the live account, trigs rolled up, strong, odds favorable, not at all a clear path, very much into a termination condition, maybe the potential to break. You waited until price cleared the fib, and you got out with a loss of momentum. And I like this one, Pete. You got out on the wrong side of the small triggers. You didn't force it to go to 20 ticks. Great job, dude. Really good looking trade. Nicely done. Everything's still good. Odds favorable. Potential to break. Perfect entry. Sure enough, went down just far enough to stop you out, then went north. Your stop was at 20. 2 to 3 ticks. You put 4 ticks on it. But man, I don't think 4 ticks was the right number. I think with those triggers, should have been somewhere around 17, not 20. Yeah, 4 or 5. 2 to 3's tight, guys. We're good, but we're rarely 2 to 3 good. I mean, there's a lot of emotion in the market. Great trading, though. I like it, and it sucks when that happens. And then a lot of times, guys, if they do get you, that reversal bar says, wait a minute, let's get back in, let's go. Triggers rolled up and separating. Is it really a clear path directly into a divergence high, Pete? Of course not. That's a termination condition, textbook. 100%, without a doubt. Perfect entries, though, make manageable trades. My first exit would have been right there at 46. That would have been 16 ticks right back into that termination condition. And then maybe let the last one run if it's going to run. But you're doing all right. You're up a grand. But guys, that was directly into a termination condition. I think Pete did this for the class. Pete said, I'm going to see if he really reads the annotations. I'm going to trade into a termination condition, and I'm going to show the class that this jerk face doesn't miss anything on a chart. I try not to. But that's okay, because Pete knew that he was trading into that line. Oh, you forget about prior divergence sometimes? That's okay. You know, Pete, that is, when it comes to termination conditions, that's the one that more people ignore. So much so that I actually have this picture put in. There's the list, I'll give this to you guys, of what can constitute a termination condition. The divergence lines are always the most ignored, and I don't know why that is. But let me give you a little insight. Not Pete, it's really everybody. Pete probably knows this. He knows more about the market than I do. So what happens on these divergence lines, just so you guys know why they're termination conditions. The buyers are in control and they are screaming to the upside. And right here at this exact number, the seller said, you know what, go to hell. We're going to push you down. And not only did they push them down, they stole their momentum, and that's what creates this pink line. So price creates this line. Price doesn't reach this line. And the buyers say, well, you know what? We really wanted to go up to that fib. We're coming up. And when price reaches a divergence line, what this is this is the line in the sand that the sellers put there. And they said, this is the exact point where we told you we didn't want you to go up anymore. And there's a chance that this is where we start our run down. We gave you a very clear visual. I need you to respect it. So we let the trigger lines break a little bit. That's why these divergence highs and lows are what they are. And here, it's just a loss of momentum. But if price comes down and retests 75, guess what? Right into a termination condition. Great charts, Pete. And I think a good lesson in there too. Thank you for that. But I think one of the things is when you say to yourself, this is an area that may stop the market, what you're telling yourself is that's a great spot to take some profits where the market is likely to go. All right, Gary, you are the squishiest chart ever. Look at that termination. No more shorts. Look at that termination. No more shorts. Gary says, wait a minute. I got a trade for this. Absolutely beautiful. Perfect execution. Terminations on every chart. And he uses a range chart and a white bar and says, this is my trade. And I'm going to take it right up to trouble. Gary, you have gotten so solid with that trade. Nicely done. And then Wayne, termination. There was your white bar trade. Market comes down. Is this a good entry for a 36 tick target? And why? Walk me through the reasons in favor and against. All right, I like this. Wayne's like, all right, Mr. Chart Reader, let's see what you got. So let's do it. Are you in here, Wayne? Guys, sometimes you'll be in a trade when I go after your charts. If I hit your charts and you're not here, just ask me to go back through it. So Wayne, termination, right? Love it. That's the first step in goodness the other direction. No triggers through. So I'm going through the positives first, and we're just going to work our way down. There's your white bar trade. You chose to ignore it. That's a white bar. Oh, not by your rules, because you need it to be the second. You need it to be the second bar. No worries. Okay, so you didn't have a white bar trade. Let me take that off. So right here, let me write out what I have. I have no momentum. I have no clear path. Large chart kinda sucks for shorts. The only thing I have going for me on the large chart is that it's coming off of a fib. But it's going directly into one-to-ones. My large triggers are up. My smalls are way above it. On my range chart, I'm directly into an HVA line at a termination condition with my smalls above the large. And your small chart has a little snapback relying on nothing but the immediate momentum. So Wayne, is this a good shot? Man, you've got this much potential to the fib. So for a 36 target, I say no, probably not. Right? There's no room to the fib. Your synthetics are still up. You're above the one-to-ones. Man, I think that your best trade was from here to the one-to-ones. Trading to trouble rather than trading directly into trouble. Does that make sense? This is one that I would probably personally sit out, but it doesn't matter what I do, right? You might be into blondes. I like brunettes. Everybody does different things. But I never say, is this good? What am I up against? What are my advantages? My advantages are the termination. My advantage is that the small trigger's rolled. What are my disadvantages? I don't have odds favorable momentum. I don't have a clear path. I'm directly into this HVA. I don't have a lot of room to my next target. So if this were a bar fight, Wayne, do you want to fight with the advantages or the disadvantages? I want to be on the disadvantages side. There's a lot more of them. So I probably wouldn't risk my money on this trade. No matter what happens next, it's easy to say, man, it would have gone all the way to here. But it could have just as easily bounced right there and just taken you out. Does that make sense? I think people get bummed when I don't really get on board. But all I do is I talk about advantages and disadvantages, and then it's up to you to make the decision whether or not that's your trade. But I weigh out every scenario like that. Where am I coming from? What do my triggers say? Do I have a clear path? Do I have room to make money? If that problem area creates a bounce, is there time for me to react and make money? I hope that made sense. Yeah, I noticed. I like that you did that, though. I like that you put it in here, and you're like, hey, Mark, I see this. Let's talk about it. Guys, you can do that. You don't have to take a trade to post in this room. Sometimes these trades are these not trades are some of the best educational things, because I always go back to what are the advantages. I always go back to what's against this trade. And what you'll find is that you'll start thinking the same way, I think. There's that termination. There's that second bar, white bar. You crank it in and get paid. I love this. Target one is 9 points always. That's $180. That's not bad. NT crashed after target one, had trailed the stop, so minimum damage. Nicely done. Would your exit have been down here at the fibs, though, Wayne? Isn't that one so much easier when you have all that room, nothing in the way, everything is solid? I love this trade, and you killed it. Your entry might have been a little late, but oh, you took the pullback. You took the snap back to the smalls. That's a good one. So I see exactly what you did there. Dude, that's a great one, Wayne. And I like that you sat out of the one that you weren't sure of, But the one that fit your rules perfectly, you didn't hesitate. Nice job, dude. Not a lot of pictures posted today. All right, Tracy, let's see what you got, my friend. Tracy says, momentum, scissors open. I love it. I don't worry about the bars. I don't worry about the bars. I just look at the separation. When I teach momentum, Tracy, every day, I never reference the bars. I always talk about just let that separation between the small and the large. Momentum, barely 50-50, but good scissors. Synthetics, large triggers, trending close. Entry just above the mid band. I see what you did there. How did this one turn out? Did you give me the second half of it, Tracy? Is that what this one is? Nope, that's a different trade. I love to see the end. I love to see the end of these trades. So let's go to the S&P at 7 in the morning. And let's see what it did. Because I think it's important. We were... ours look very different. It hit targets. Nice. Nice, nice, nice. The advantage of momentum coming from a termination reverses the market. Everything's up. Beautiful entry. You know where your stop goes. I like it. The only challenge is that it's barely a 50-50. So the only thing that I would ever ask on this, Tracy, is were you prepared to manage if things changed? Because it wasn't perfect. And you may not even know how to yet. You might just be going through the KISS plan. But, I mean, when you take entries like this, the risk is minimal. You've still got room to get back to potential trouble. I really do. I like this trade. Nicely done. And then here we have the momentum, the potential to break. And once again, you absolutely nail the entry. And you got stopped out. And Tracy, I think you saw it after. This market just consolidated, right? This market went sideways. Sometimes you're going to take a loser when it looks good. And if you go back to crude oil this morning, those guys couldn't make their minds up for a couple hours. You took a good looking trade. It just didn't work. Just didn't work. It happens sometimes. And those are the ones that you can't feel bad about. You had a strong bottom. You had momentum. You had the potential to break. You had the perfect entry. You had, oh my gosh, everything going for it. And those jerks came and got you. It's going to happen every now and then. Jen, odds favorable, clear path. Entered after trouble, got out right before trouble. Beautiful trade, Jen. Momentum and a clear path. Let me make a couple $100 and wait for the next trade. Pete says if Jen can do it, I can do it. Odds favorable, clear path. Let me get above the yellow, right? And once again, could have been out at a fib. Oh, didn't fill. No worry. That happens sometimes. Same trade, different time zones. Nicely done. Jeffrey Dean says, man, I can do it too. Wow, guys. Saw the pullback to the cents 1-to-1, set your limit, got out just before the divergence high. And then came back and took the trend trade because you didn't hit the target. That's some heads up trading, Jeffrey. Guys, check it out. Momentum trade, when it fails, he gets paid. And he says, but look, Mark, there's one of those cool trend trades that you talk about every freaking day. And that one went, didn't it, Jeffrey? Great trading. This is what I like to see. I'll get in only because of momentum. And then when momentum's over, I'll get the hell out and let it turn into a trend trade. Jeffrey, that is probably my favorite trading look for the people that take both of those trades, is the way you did that. Nicely done. And then Wayne, gap theory. So Wayne, the only thing that I would say, especially on the NASDAQ, can I give you my 2 cents on this one? I'm going to give it to you anyway. This is for you NASDAQ traders. This right here, both of these triggers screaming down, say there's a good chance we may push a little lower. And you didn't have any areas to come off of, Wayne. Waiting to get to the other side of those triggers is going to keep you out of a lot of trouble. But the one thing on the gap theory, and the part that we didn't get on this one, and let me go to NASDAQ and I'll show you. I'll see what my NASDAQ looked like. Is you didn't have any areas. There were no areas. So it's not even the gap theory. It's a retracement. Usually, well, always 100% for the gap theory, you have to hit an area. And you never did. And you really didn't have any areas to trade from, which would be even more reason why being on the correct side of those small triggers is going to help a lot, rather than just hoping it randomly goes back up. Does that make sense? At least this way you're on the other side. And then Gary, it's story time. And then Miss Cindy. Odds favorable, potential to break, pull back to support inside of favorable large triggers, easy money. Wow, Cindy. Pretty effortless, right? And look at you, 1,500 bucks. 8 lot. Isn't that the easy one though? Like that's the one you're not supposed to ever miss. Momentum, momentum, momentum. Pull back to area, favorable large triggers. I know exactly where the risk goes. Oh my gosh. Boom. Virtual high five for you, mama. Great trade. And then Kurt says, will you look at this one? I'm working on it. And I say, you know what, Kurt? Heck yeah, let's look at it, brother. Strong bottom. Triggers rolled up at the fib. Small triggers broke Fibonacci support. Small triggers outside. Long entry. Mid-band fib. 74.16. Market flow signal. 8-3 triggers up. Small triggers outside. All right, so Kurt, couple things. And let me show you, and the one thing that you didn't really identify for me, and I think would be helpful. Did you take this entry with these big ugly split triggers because of that strong bottom? That would be my biggest question to you. Did you take that entry because you were coming from a strong bottom? Because of the momentum? Because every chart was absolutely screaming north? Or was it the market flow signal at the area where the potential... I know, but how did you pick your entry? If you were going to enter, would it be the fib in the midband inside of triggers? That's your best entry? Or is it because of the market flow signal? So you would have said, this is what I'm asking, and this is how plans are built. Because it could pull all the way back, and you'll notice that it's not odds favorable momentum. Your synthetics are still red at the time of entry. But because of a strong bottom, because of strong small, odds favorable, I know that it can create a bounce let me force confirmation. I like it. I like it a lot. So now your job is to go find 20 pictures of it and see how consistent it is. See how consistent it is. Wayne, what do you mean? Pick in chat, please. I think I've gotten all yours. Did I miss one? I like it, Kurt. I do. And it makes sense. And I think that the strong bottom gives you a little leeway to take a chance on an area that's not broken. The biggest challenge with this trade is the gap theory. Are you comfortable with the gap theory? Hit a mid-band, large triggers full bar away, it could come back. So this strong bottom gives you the okay, maybe I'll take a shot. And then confirmation says at least my risk is defined if I do it. So it's a very logical trade. Well, if you're going to use market flow for confirmation, your stop goes below the market flow bar. That's it. How easy is that? And then you respect the fibs, right? You're anticipating this one to break. That's why you take the trade. So there's your target. I like it. I think that's well thought out. Miss Jen, everything says up. Waited for the back to clear. What kind of trade is this? It's a momentum trade. Right, Jen? Is it? Okay. You entered at 71. Your entry was about right there. And your smalls, well, they were almost outside of the large. So Jen, what is the number one thing to have in a momentum trade? Momentum. Momentum, right? That's the look. That's the look. This is the, hey, momentum might be coming. This is the, momentum might be coming. But you don't have the best look on this one for a momentum trade. I understand completely why you did it. And it makes sense. And you were up $100. You were up $100 in the trade. And you gave back, I don't know, small loss. Cool. So one of the things with momentum trades, Jen, and we talked about this yesterday or the day before, or one of these days. I'm going to give you my 2 cents because you know me, I'm not shy. Let me show you. I'm going to take this picture right here because that's a pretty good picture. If I'm in a momentum trade, I don't want price to close on the wrong side of these triggers. Because once price closes on the wrong side of these triggers, I don't know where it's going really. Unless there's a solid trend trade coming right in. So if you're taking a not quite as momentum trade and you close on the wrong side of the triggers, it's all right. Well, you exited 1, 2, 3, 4, 5, 6 bars on the wrong side of the triggers, right? So this is one of those ones where the visual right here, you're out almost break even, like a tick. You did exit on the wrong side, but there's your first indication. And this is one of those ones, especially if momentum's not great, I will literally put my stop placement on the reversal bar marker because I'm relying on momentum to carry this trade. And if I'm on the wrong side of those small triggers, I don't have momentum. And I think, oh my gosh, who did this earlier? Jeffrey Dean. And he's a bar too late, but do you see how he did this? He gets in with the momentum, everything's cranking up, he goes, oh crap, wrong side, let me get out. And this will probably turn into a trend trade. And I really think that it's this mentality right here for you momentum traders that's going to double the profits. Because when this thing goes, if it goes, you've made money twice in the exact same area. I hope that makes sense. Good stuff. All right, Steve Diego. Steve says, we're going to do things in triplicate, Mark. Fib overshoot. All right. Divergence prints. Okay. Price closes above fibs with strong triggers. After term triggers roll. White bar closes above triggers entered here. So Steve Diego, what is the first rule for the white bar trade? Not terms. No triggers through the fib, Steve. What does that mean about your large chart? It means no dice, brother. It means you don't have an actual white bar trade here. You overshot. It's not the best look. Does that make sense? I love that you got paid. But that's the rules. So as you work on this white bar trade, I want you to focus on following the rules. And you got away with one here, without a doubt. You traded into the 1-to-1s. You held past the fib. Why are your fibs not showing up, though? Why are your 5-1 fibs not showing up over here? You've got one here. There's a huge discrepancy between fibs, Steve. I would try to get a little consistency on that. Because if this fib, and this here, let me throw in the bonus points for you. If this fib at 360 was over here like it should be, perfect trade. Does that make sense? You're missing synthetics. That synthetic fib over here would have absolutely supported this trade 100%. So I think you nailed it, and I think that the logic is right. Maybe make sure you may need to repair, but I would try reloading historical. But you see how you've got 1, 2, 3, 4, 5, 6, 7, 8 lines here, and you've only got 3, 4 here? You're missing half your fibs. But, I mean, that's kind of good news because there should have been a fib right here, which means that's perfect. And Wayne's going, hell yeah, second bar's a white bar. Let's go. Nicely done, Steve. You got me on a technicality. Cool. All right, let's see. Second trade. Saw strong triggers, odds favorable minimum, 34.5. Made the mistake of not having momentum and going directly into terms on the 13.2 chart. And again, Steve, this is the exact same thing. If your fibs would have been there like they should have been, that termination's on the 34 as well. Refused 200 when price double hit fibs. Came to my senses and exited break even. I like that. No trades into terms, especially if there's no potential to break. My only excuse was taken by your clone. Man, those damn clones, they come in. AI's killing us, isn't it? And again, Steve, if these synthetics were over here, directly into a termination. So the same way it supports this one, it keeps you from taking that one. I love all the annotations, though. Guys, you're always going to make mistakes in life. It's just what happens. And when you do, it's all right. And then there you go. You nailed it again. And that one's spot on, Steve. Termination, 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 white bar, giddy up, take it to trouble. Man, beautiful. Nicely done, Steve. You feeling pretty comfortable with it? With the white bar trade? You're nailing it. Absolutely nailing it. That termination's key, though. There's a termination. There's a termination. Let's get this one up. Can anyone guess what that circle is around? Boom. There's your white bar, Wayne. Second bar goes up, snaps back to the triggers. They hadn't rolled yet, but when they roll and it snaps back right to the HVA, Gary probably took that one. He's probably still getting paid on it. Next level, guys. We build a foundation, then we grow from the foundation. So right now I have a termination. I have odds favorable. I don't have any areas inside, really. Smalls are below. So I have to wait for a close on the right side. Is that right, Jen? If I'm going to go long here, I need a close on the right side of the smalls. And then if I get it, maybe we take the trade. My stop's in the wrong spot. Price can still come back to these synthetics, though. I don't know where $100 is. Right about there. That's a little NASDAQ nuance, guys. Price gets to the wrong side of the triggers, I don't want to be in it, right? But this was just a little for you NASDAQers. Wait for the close. Keep your stop in place. Whatever. Where are we going? I don't know. I wonder if it'll go to these 1-to-1s. We'll see. I don't know, Kurt. Google it. Why would it be? What's going on Monday? There's my first target. Can I go break even now? Do you guys see how easy it can be to make money once you pay attention a little bit? And we'll see if it keeps going up as long as it doesn't close on the other side of the triggers. What do you guys say? We'll hold this one to eternity. And we'll just chase that reversal bar marker. Let's see how much it gives us. Wow, it's still going. It's still going. Let's see. We're into trouble, but let's force a close. What do you say? Look at that. Trouble's a good reason to exit. How do you guys feel about 650 bucks? That's not so bad, is it? And I gave back $100 I should have got out at the darn 1-to-1. There's your NASDAQ nuance right there. Strong bottom, odds favorable. I was in at 54.23. I was out at about 56.23. 2 minutes. 2 minutes. Yeah, Jen, we were just testing that idea that once I get a close on the wrong side of the triggers, it's likely to go down. Your stop was too much on the previous trade. Could have been break even. But you guys see how fast that happened? That's why you have to have your poop in a group if you're going to trade the NASDAQ. Odds favorable, 50-50, 2 divergences, pump the brakes. I like it, Jen. I like it. You said your stop was too much on the previous trade, could have been break even where reversal bar marker was. Right on. I think so too. I think so too, Jen. Does that make sense though? It sounds like you got the lesson. Yeah, Morgan, yours just didn't, your 1-to-1s didn't print over. There may be a little tick difference. Do you guys see 3 divergences kind of in the same price range too? And if you were willing to take the next shot because it missed it by a tick, you made it to the fib. The green bar's going up. The middle, hold on. Hold on. The second divergence, green bar's going up. Oh, I didn't get it, huh? I only had two. Morgan, I would probably, if it were my chart and it looked this difference, John and I had the same thing once. And what happened is I had some gaps. I had some gaps in my data that needed to be filled. And I actually loaded up his kinetic and it fixed everything. I would definitely repair and reset and see if that helps. But you have a gap in your data somewhere. So I wouldn't only reset and repair, but I would also, instead of just getting rid of cash and tick, I would ditch everything and start as fresh as I could. Wayne, you didn't get the white bar off the bottom? Man, I did. But you still got the trend trade, right? Or the second one? Right on. Don't watch me, I'm no fun. I just like this lesson, and the whole reason I was chasing the reversal bar, guys, was because I wanted to see. If I really want to hold, if I'm really worried about it, there's no reason to give a ton of it back. Like 1 bar's worth of information lets me know that that retracement is imminent. So kind of a good lesson there, I think. NASDAQ's fast, but that was an easy $650. And now I've got a termination condition. But my triggers are still strong up. And Wayne, I got a white bar off of it. But when the triggers are really strong into an area, it's going to bounce a little bit. Let things roll. You had your first shot, and now when everything rolls, we have a better shot. I like to let those small triggers roll. That makes me feel pretty good. Makes me feel mo better. Oh, right on, it's there now. Cool. All right, guys, I'm going to take NASDAQ off. There's crude oil doing what crude oil does. Look how that held. Resistance became support, and the sellers tried 1, 2, 3, 4, 5 times to get below that key area. And 5 times the buyer said no, no, no. And you guys knew about that area. You didn't get sucked into short trades. You're too good for that. Uh-oh. Hold on. Nope, that's earlier today. A lot of movement. This is a good Friday, isn't it? 3 divergences in the same price range. Is that a red flag for anybody? 3 divergences in the same price range? I should teach that. Guys, I'm going to go take 5 minutes. Gary, here's the beauty. You don't have to be happy with it if you're at 70%. But when people say they're not happy with it, it means you're probably breaking rules. It means you're probably taking chances. It means you're probably missing opportunities, right? So that's good awareness. I don't waste time being unhappy though. Never serves me well. Pete, how long after 3 divergences, in this case 4 divergences, is it safe to go long? There's no such thing as safe to go long, Pete. So when I talk about divergences, it's the same rules. This divergence is 1. This divergence is 2. This divergence is 3. This divergence is 4. Once my small and large get above these areas, reset the count. I use the exact same idea on divergences as areas, right? Smalls and large break above. it's out of the picture. So it's never safe. Nothing you do is ever safe. What does safe mean in day trading? Hell, I don't know. So there they are. And there's your momentum trade right there. You get above all the problem. You get above the one-to-ones. There's your momentum. Let's get out of the fib. Life is good. Does that make sense, Pete? So I use the exact same idea. Once the small and large get above this, rear view mirror. If the small and the large get below here, rear view mirror. Notice that they never break. Kind of cool. That's a good question. Thank you for that. All right, guys. I'll see you in 5 minutes. Post them if you got them. Let me know what you want to talk about in the last hour. I'm back. I wanted to do this though. Every time I look at a chart, I have to ask myself those three questions. Do I have momentum? Is my path clear? Do I have an entry? And I'm going to tell you guys, some of you, and I know you did, went long right here and got run over. And you said, well, the mid-band's got to hold. And you got run over. And you got to the 1-to-1s. And you got run over. This was the story of my life when I started trading. It's almost good enough. I'm going to take the trade. And then when it doesn't work, I'm mad that it didn't work. So I take it again. And that doesn't work, I'm mad and I take it again. If you guys get in the habit of really sounding off, right? Scare your pets. You have to eventually get to this honest point with yourself where you say to you, I don't have momentum. It looks like it wants to try, but it's not odds favorable momentum. That wasn't either, was it? And look what happened. It's not a clear path because my large triggers aren't through. And then you'll start using language like, well, it's almost through there. It's close to odds favorable momentum. It's not rules met and then my favorite, but I really wanted to be in that trade. And I think this was such a great example of how knowing your rules keeps you from taking the wrong trades. It keeps you from just giving money away, guys. And if you convince yourself that that was the right trade, and then it bounced at the 1-to-1s and you got excited, you're like, yes, I'm going long. And you're like, son of a bitch. That's odds favorable momentum against me on both charts. And it still went down. So great lesson right there. I hope you were paying attention to it. It's okay to let your rules be met. Smalls above the large, that's a good look. Clear path, not so much. Divergence, egads. Split triggers, what the hell? If you were thinking about going long, this may be one of those times when confirmation isn't a bad deal. 3 divergences said don't do the short. If you didn't believe it, shame on you, right? Rules are designed to give you the ability to recognize when you have an advantage. Rules are designed to give you the ability to recognize when you don't have an advantage, guys. That should be your goal as a new user. Your goal as a new user shouldn't be to get rich, shouldn't be to buy a Ferrari. It shouldn't be anything more than being able to recognize momentum in a clear path so you know when it's time to look for an entry area. All right, there's my preachy soapbox. Gap theory. Price accelerates away from the large triggers, hits an area. It is very likely, not obligated, to come back and close the gap to those large triggers. It may not. But I know that's an option. And it just rifled down, right? A lot of momentum down. We'll see what happens. What do you guys want to talk about? I've gone through all my lessons. I've gone through all your pictures. I've answered all your questions. What do you want to talk about? What can I do to help you? Mark, I'm thinking about buying the software, but I have this hang up. Here's what it is. Give me a chance to address it. Mark, I've been inconsistent for the last 6 months, and I've refused to post charts in the room because I don't want to look stupid. What do I do? Tape up, play hurt. Post them in the room. Mark, I keep getting stopped out. Well, show me your charts. Where are you getting stopped out? Are you getting stopped out at the areas, or are you getting stopped out where the market shouldn't go? What you guys will find is that I have an answer to almost every question that you post in this room. I have a solution to almost every problem that you're facing. But there's about 5 or 6 of you that post in the room religiously, and there's 40 of you that sit in the shadows hoping to become a great trader by listening to me talk about someone else's charts. Show me what you're doing, guys. Show me what you're doing. Josh, did you have any great entries today? I bet you did. The more you post, the more you learn. No, not really. Damn it, Josh, you could have lied for the sake of the class. This is why we're growing apart. It's that right there. Haven't traded yet? Work calls. Okay, that's fair. That's fair. But they would have been great, right? Had you seen them? Had you gotten them? Guys, learning is fun, but learning is hard. Because learning forces you to admit that you don't know everything. Learning forces you to go back into a student role. And you're all alpha males and females. Every one of you is an absolute badass in what you do. There's no doubt in my mind. And you've got to kind of humble yourself and go back to this learning. I'm learning something new right now. I'm taking that class all of you guys got the email about. Janesh's class, Sophia's class. And it's even more humbling because I taught Sophia the high probability trend trade. And now I'm going to her as the student. Teach me what it is that you're doing. And guys, if you don't think it's frustrating to be so good at reading indicators and realizing that there's new things to learn, you're just like, oh my gosh. It's tough. If you don't think it's tough being John Novak's brother and not trading as well as John Novak for years, that's frustrating. Talk about competition. Odds favorable, guys. Potential to break. If I get a pullback, that's my low point. If I get a pullback, that's my high point. If it doesn't work, that's where they're going to get me. Shadow, Wayne? What do you mean? John Shadow? No. He does cast a big shadow. It's just, you know, for me, Wayne, when I started learning the software, I sat in the exact same seat that you guys are sitting in. I was told to write down my rules, and I was told to take pictures, and I was told to use a spreadsheet, and I was told to participate in class. And I had this cocky sense of obligation or entitlement that I was going to be good at trading because my last name was Novak, that I was going to be great at trading because honestly, I was pretty good at most anything I put my mind to. And trading was different, and it humbled me, and it cost me a lot of money. I would have been better off putting it in the driveway and just burning it because I didn't follow the plan. And now I'm at this point where I'm so good at what I teach. Guys, I read charts in a fraction of a second. I know my trade rules like they were my kids' names. But the reality is that the learning never ends. It never stops. There's always a way to squeeze a little bit more. And that's what I'm doing right now is I'm learning how to squeeze just a little bit more. We're just going to keep doing this. If we get an entry, great. If we don't, whatever. So you've got to be willing to be taught. And the biggest part of being taught is, guys, there's pop quizzes and tests in college and high school for a reason. Hey, I know you're learning the material, but let's test your ability. Let's test your ability to recall that information, to use it in the real world environment. Thing one and thing two. Tweedledee, Tweedledum. So what happens if this market hits those one-to-ones before they come back and give me an entry? Look how my window of opportunity keeps getting smaller. Just taking huge losses. Shame on you, Morgan. Unless you're learning from them, right? You guys know that old fictitious Einstein quote? The definition of insanity is doing the same thing over and over, expecting different results. I don't know if he really said that. Might have been Gandhi, but it's pretty true. Yeah, it happens less and less. And my wife is going to smile right now and she won't know why, but her favorite phrase is give yourself some grace, right? You're new. Allow yourself to be new. Allow yourself to make mistakes. Allow yourself to not be perfect. But make sure that you know your rules so well that when they set up, you're ready to pounce. And that's it. That's the goal, Morgan. And it doesn't always work out that way. Sometimes you still take the trades and you're like, shoot, I knew better. What do you guys think? I'm 2 ticks below the lowest point of resistance inside of triggers with odds favorable momentum and room to my target. Are they going to get me? I don't know. Am I obligated to have a winner? No. But we're going to follow the KISS plan. And the KISS plan says, this is my entry. And my stop will be somewhere up here around 65, which means that I'll have 10 ticks, $100 worth of risk, if I'm filled in this trade. Is everybody with me on this? Do you see it? Here they come. Whoa, this is exciting. They're so close. Oh no! They tapped me and didn't fill me. Should I just jump in? Oh, there it is. Triggers are at 60, stops at 65, entries 55. There's $100 and there's $200. Do we want to be able to see? We'll go points. There's the money. There's the ticks. So my stop is where the market shouldn't go. My entry is where it should continue. My first target is $100 and my second target is $200, and my rules say once I get a reversal bar, my risk is there. Once I hit my first target, my stop is break even, and I don't touch a thing. It's either going to hit my second target or it's not. Anyone that listens in this room and is following the KISS plan should be up $100, put in their account with absolutely no fear. What do you guys think? Does it make sense? Does it work? Can you do it? If you aren't sure, then you need to be asking questions. If you hesitate, you need to ask questions. If you're not sure if that's momentum, you need to ask questions. It's kind of fun, isn't it? I'll be out before it happens, Jen. I'm at break even. There we go. I'm out break even. But absolutely I exit. That's what my plan says. But my plan also says with this look, after a second higher divergence, if I get a reversal bar, I can take a re-entry because my risk is established. But if I get a third divergence, I have to exit. And that's not the KISS plan. That's a little deeper into it. Does that make sense, Jen? Not everybody has that rule. That's one of my rules. Because what does it mean? It means that I've already got 2 losses of momentum. I've already got small triggers above the large. My large are already rolling. That's not the perfect trade anymore. This was the perfect trade. But my stop's where the market shouldn't go. I still have momentum. We'll see what happens. Who knows? Maybe I give it all back here. I've got 12 ticks of risk on this trade. But guys, all I'm doing right now is learning. That's it. I'm on simulator. Doesn't matter if I win or lose. What matters is that I can walk through this and talk through this and say, this is what I see. This is why I did what I did. This is why I did it where I did it. This is where my stop goes. This is where my targets are. What do you guys think? Should we put the first target at the 1-to-1s? Oh no, I think I'm about to crash Ninja Trader. My target's stuck. Oh, there it goes. That is my second crash in 3 weeks. That's not too bad, but I hate it when it happens live. I hate it even more when it happens in the middle of a trade. But you know what? My stops and targets are in place. They're already there. Let's load it back up. Hey, look, there they are. Still in place. And it looks like I'm still in this trade. Ooh, looks like they're coming to get me, though. This is why I don't panic if it crashes, guys. Everything's electronic. It's in there. Did anybody panic and exit? Oh no, it was a reversal bar against my trade. I'm ever so scared. Or did you say my rules say keep my stop in place, let's see what happens? You could do whatever you wanted to, Morgan. You could move your stop to 2 ticks. You could put your target right there and say, you know what? That's a trouble spot. I'll make 50 bucks, and if it breaks through there, we'll see if it hits the fib, right? You could say, I only want to make 1 tick on the first one to cover commissions, or you might say, you know what? I know he talks about fibs every day, but let me put it on the other side of the fib and hope that it breaks. And this is, you can do whatever you want, but you have to know why you're doing what you're doing. You have to know why you would enter, why you would exit. And this was one of the lessons we had yesterday, guys. Your first shot is always your best shot. Because the more it dances, the more the buyers and sellers are fighting. We're just going to let this one run out. Because it doesn't matter to me what happens. Couldn't care less. Simulator. There's got to be a lesson in here somewhere, right? And Jen, this divergence low would have kept me from re-entering in the real world. But I still like the trade. I still like the look. I still love the momentum. But I'm not coming from a strong top. It might be. I sure do like that fib inside of favorable large triggers. Guys, it's not a coincidence that there is so much. Oh, you're talking to Jay, yeah. This is me just playing. What do you guys want to talk about? We can shut it down early today if you guys got things to do this weekend. Got someplace to be. Ron, bikinis to chase. Oh my goodness. I'm glad I didn't jump out, right? Let's put a smarter target though. How about if we put it right at the termination condition? Guys, you're witnessing the fight live between the buyers and sellers right at the key area. Be interesting to see what happens on this one. How many of you would have jumped out just because it's taken too long? How many of you would have jumped out because of a reversal bar? How many of you would have jumped out because the small triggers turned up? How many of you would have jumped out because the large triggers turned up? How many of you would have jumped out because it didn't go, right? Still chase them, just don't remember why. That's what we're trying to eliminate through practice, guys. Is that pull the ripcord. Get out because your guts tell you to get out. Getting out because you're nervous. Getting out because you're afraid to lose. Sometimes you just got to let them run. What does the large chart say? What direction is the large chart going, guys? Up or down? It's going down, right? How's the momentum on the large chart? Pretty good, right? I've already bounced off of resistance 3 times inside of favorable large triggers. Find a reason not to trade, Wayne? I guess that depends on your mentality. Some people find a reason not to trade, and they'll break their rules, or they won't follow their rules because they think they found a reason not to. I look for reasons to win. I look at my advantages. Odds favorable, clear path. You just jumped in. I like it. First target hit, second target break even. So Tracy, just jumping in with momentum and a clear path, right? I like that, Wayne. Just jumped in. Momentum, clear path. I see a lot of people make a lot of money on that one. All right, there's 3 divergences in the same price range. What do you guys think? That's an exit condition, isn't it? Do we let it hit our stop or do we just hit close? 3 divergences in the same price range, guys. What do I do? Do I hope it goes down or do I hit close? That's it. No matter what happens next. No matter what happens next. And watch, it'll drop like a ton of bricks. And then I'll start to question my rules. I'll start asking myself, man, do I really want to teach the class that 3 divergences is a termination condition? Do I really want to exit trades at 3 divergences because this one time it went down? Let's see what it does. Oh my gosh, it just saved me $50. That's pretty cool. That's pretty awesome. Guys, I take these trades in class. Mostly, I want you guys to notice that when I'm in it, I'm calm. When I'm in it, I don't care. My stops are in the right places. My targets are in the right places. And I don't jump out because of fluctuations. And I don't make fearful decisions because I know my plan. And my plan is a good plan. It's a solid plan. It's a plan that wins more than it loses. And as long as I follow it, I have the potential to win more than I lose. That's what we do here. How do you add bling? Let's go through it. Let me give you the file first. So you need to download this real quick. Wayne? Let me know when you have it. We'll go through and do it together. Isn't that pretty cool that you have a pretty solid set of rules? All right, so what you're going to do is you're going to go to Tools, and you're going to go to Import, and you're going to go to Ninja Script Add-on. And then when you click it, it's going to bring up the box. So you've got to go find your Gemify order line decorator. And you need to open it. Let me know when you're there. Cool. So once you open it, you're going to right-click on your chart and go to Indicators. And Gemify should be right there at the top. Double-click it, and it'll give you the order line decorator. Double-click that, and it'll put it down in Configured. So once it's there, let me know when you get there. You're going to close and click anywhere on your chart and hit F5. Yeah, we'll go through it again, Pete. And F5 will reload the Ninja script and that will activate it. So Pete, do you have it downloaded? Tools, Import, Ninja Script Add-on. Yeah, they went down anyway, didn't they? Assholes. That happens sometimes. So once you click import, Pete, click on Gemify and open it. Once you open it, right click on the chart, go to indicators, and see I don't have it on my large chart. Double click, and then double click order line decorator. And we're going to apply it. We're going to put this on my large chart and then click OK. And it's going to recalculate. And you're going to be like, cool, it's there. But it's not yet. So you can see if I sell, whoops, I don't even have a stops and targets. So if I sell right here, you see that it's not working yet. So what I have to do is click on the chart and hit F5. And once I hit F5, it's going to reload the Ninja script. So once I reload that Ninja script, if I sell that market, there we go. And now it's in. And that's all you got to do. Guys, I'm going to give you a word of warning though. Is you'll do this and you're like, oh my gosh, if I put my target all the way up here, that's $610. Wow. And you will ignore everything on your chart because that tells you that you're going to make $610. And that's the one thing that I've seen be so bad about people putting this on there is they stop trading rules, they start trading that number. And that number doesn't mean anything. That number is a byproduct of the process it takes to get there, guys. So all of you that are putting Gemify on there, there's your warning, there's your cautionary tale. You'll start pushing it out where it doesn't go because you want to make more money. You'll stop putting your stop in the right place because you don't want to give back the money that you see on that chart. After you load it in, you've got to put it on your chart. So once you load it in, you've got to go to indicators, double click Gemify, and that order line decorator is the name of the indicator, Pete. So you have to double click that to get it down here. Well, Morgan, if you've got preset stops and targets, you don't have to do the math, right? Man, that's a horrible thing to focus on. You guys ever hear you find what you're looking for? You ever know people in life that always focus on the negative and it seems like their life is constantly negative? That people look for what's going to go wrong and they always find the thing that goes wrong? Guys, look for advantages. Look for reasons why the trade's going to work. But look for reasons that your analysis could be wrong. Guys, the numbers are a byproduct. They have nothing to do with whether or not you're in the right trade. They have nothing to do with whether or not your stop is in the right place. Just throwing that out there. Morgan, who cares? Who cares what your possible loss is if you have every advantage, right? If you have a trade that's likely to win more than it loses, does it matter if it's $20 more than you wanted it to be? Yeah, that's true, Ron. Every now and then, guys, I can be logical. Every now and then. 21, Josh. 21. But here's the thing. If you're still working up the courage to take the right entries, NASDAQ's just going to whip your ass. Because it means you don't trust it yet. Or at least it has the potential to. Well, and Morgan, I agree with the risk to reward. I really do. But your reward is the potential, right? And if you have less than $200, right on, Josh. But the market flow isn't a confirmation tool for the NASDAQ. NASDAQ has a different set of entry rules, brother. That confirmation just means it's going to confirm that you're getting your ass kicked against those small triggers. Respectfully. Let me show you something that'll pay dividends way more than that market flow chart will. When you look for trend trades, memorize this picture. Cool. Because, Josh, you'll get confirmation right here. You'll get confirmation right here. And you may not get confirmation right here. And if you believe that market flow is going to save you from these triggers, you're mistaken. But, yeah, of course you do, Pete. Why would you have stops and targets if you're not in a trade? Silly. Does that make sense, Josh? You may get confirmation all the way down. But, okay. I worry about you guys that go to the NASDAQ and try to trade it like crude oil. Oh, I don't have any other markets open. No wonder it won't go to a different one. Right on. Then, Josh, you should be posting a metric ton of NASDAQ pictures in this room. I know a guy who's willing to analyze everyone with you and see if there's a way that he can help you to do it better as you learn a new market. Allegedly, that's a thing. He is. He's kind of a jerk face. I heard he drinks a lot, kicks puppies, eats the devil's lettuce. I don't know, what other bad things are there out there? Eats it. You like that? Well, it's lettuce, right? Injects the marijuana. That was always my favorite. Morgan, you're in the land where it's legal. It's not here in Texas. Isn't that weird? That it's okay for one state and not another? That never made sense to me. No, but yeah, here either, Ron. I don't care. I used to be a very accomplished drinker. Now I don't drink much. But if I had my choice, like if my kid said, hey, Dad, I'm either going to drink every night or get high and fall asleep. Which would you rather I did? I'd rather my kids got high and fell asleep. I never picked a fight when I was high. I may have picked a few drunk. Jen, you were right on it. That's it. So, I don't know. That might be a political discussion. I'm in the Bible Belt.